Imagine you're a small business owner sitting at your desk reviewing your options for a crucial loan to expand your business. The future of your company, and maybe even your community, depends on this decision. You need capital, but you also want stability, predictability, and a partner you can trust for years to come. Across the street, two banks compete for your business. On one side is Bank Dollar, the old giant, known for its long history but now raising interest rates and sometimes changing the rules without warning. On the other side is Bank Yuan, a newcomer in town, offering lower rates, friendlier terms, and even investing in new infrastructure that could benefit your business and the whole neighborhood. Which would you choose? This isn't just a personal dilemma. It's the same choice facing entire countries and their leaders all around the world today. For 70 years, the world almost always picked Bank Dollar, the US dollar, as the foundation of global finance. It was the safe bet, the currency everyone trusted, and the backbone of international trade and investment. The dollar brought stability and power, letting America shape the world economy, set the rules, and enjoy unique advantages that no other country could claim. But now, more and more countries are eyeing Bank Yuan, China's currency. They're finding its terms more attractive, its influence growing, and its willingness to invest in their economies hard to ignore. This isn't a sudden revolution, but a slow, steady erosion of the dollar's dominance. The world is changing, and the old certainties are fading away. Nations are quietly diversifying their reserves, seeking stability and alternatives to U.S. control. They're hedging their bets, preparing for a future where the dollar might not be king. The choice between dollar and yuan is no longer just theoretical. It's a real, practical decision happening in finance ministries and central banks everywhere, shaping the future of global money flows. The consequences are profound, rippling out to affect everything from the price you pay at the gas pump to the cost of borrowing to America's ability to project power and influence around the globe. As more countries shift away from the dollar, America's so-called exorbitant privilege, the benefits of having the world's reserve currency, is under real threat for the first time in generations. The world is hedging its bets, and the implications of this quiet financial rebellion are only beginning to emerge. The choices made today will shape the global economy for decades to come. The International Monetary Fund warns that the world is losing faith in the US dollar. This is not just a passing concern, it's a signal that the very foundation of the global financial system is beginning to shift. For decades, the dollar has been the backbone of international trade and finance, trusted by governments, businesses, and investors alike. Once the ultimate safe haven, the dollar is now seen as a source of risk. Investors who once flocked to the dollar in times of uncertainty are now questioning whether it can still provide the stability they need. Years of trade wars and unpredictable sanctions have made countries question America's reliability as a partner. The weaponization of the dollar in global disputes has left allies and rivals alike searching for ways to protect themselves. The dollar, once a neutral tool, is now viewed as a potential weapon. This shift in perception is causing countries to rethink their dependence on the U.S. currency. Political dysfunction in the U.S., from government shutdowns to wild policy swings, adds to global anxiety. The world watches as American leaders struggle to find consensus, and confidence in the dollar wavers with every crisis. Investors and central banks see instability, not safety. The uncertainty is prompting many to diversify their reserves and look for alternatives. Rising U.S. interest rates have made dollar debts crushingly expensive for developing nations. Countries that borrowed heavily in dollars now face mounting repayment costs, straining their economies and threatening financial stability. Some are pushed to the brink of default, fueling the search for alternatives. The pain is especially acute in emerging markets where economic growth is now at risk. The dollar's own strength is now driving countries away. As the currency rises, so do the costs and risks of relying on it, prompting a global rethink. As borrowing in dollars becomes riskier and costlier, the appeal of the yuan grows. China is actively promoting its currency as a stable alternative, and some nations are beginning to take notice. The world's trust in the dollar is eroding, not from market forces alone but from America's own actions. Policy choices, political strife, and economic decisions are all contributing to the uncertainty. The result? A powerful incentive to seek refuge from dollar dominance. Countries and investors are exploring new options, from regional currencies to digital assets, in hopes of finding greater security. The cracks in the dollar's foundation are widening, and the world is watching closely to see what comes next. As the dollar's grip weakens, China is stepping up with a $2 trillion global lending surge. This isn't just about loans, it's about building a new financial ecosystem centered on the yuan. China's state banks are offering cheaper, more flexible credit, refinancing dollar debts and supporting struggling economies. Each yuan loan deepens financial ties to Beijing and chips away at the dollar's supremacy. China's Gambit is reshaping the global order, making the yuan a real alternative for nations seeking stability. China's push for the yuan goes far beyond big loans. Its toolkit includes currency swaps, direct credit lines, and a new payments infrastructure. Currency swaps let countries access yuan directly, bypassing the dollar. China's expanding network of swaps and credit pledges, like the $66 billion to Latin America, encourages trade and borrowing in yuan. Innovative instruments like dim sum bonds and the digital yuan make it even easier to use China's currency. The result, a parallel financial universe, independent of U.S. control. China isn't just offering an alternative, it's building a modern, accessible system from scratch. The yuan is becoming embedded in global finance, one deal at a time. The shift from dollar to yuan is already real. In Argentina, the yuan has become a lifeline, helping pay for imports and even IMF debts. Kenya, facing soaring dollar costs, is converting loans to yuan to save millions. These moves aren't just about economics. They're about escaping the strings attached to Western finance. Countries are making pragmatic choices, pivoting toward China for flexibility and relief. The trend is global. Brazil and Russia settle trade in local currencies. Saudi Arabia considers yuan for oil. The yuan is now used for trade, debt, and reserves, far beyond just buying Chinese goods. What started as a trickle is now a steady stream. The de-dollarization of the global economy is happening now, driven by necessity and strategy. The world is no longer waiting for the future, it's acting in the present. For decades, SWIFT was the backbone of global payments, controlled by the West, and a tool of U.S. power. China's answer is CIPS, a rival network for yuan transactions, growing fast and operating outside Washington's reach. CIPS lets banks clear yuan payments directly, bypassing the dollar and U.S. oversight. For countries wary of sanctions, CIPS offers financial autonomy. It's becoming the backbone for yuan trade, especially in commodities. As more deals are settled in yuan, CIPS's importance grows. Integrated with China's digital yuan, it could one day enable instant, direct cross-border payments. This payment revolution threatens to fragment the dollar-centric system. The yuan's rise is most visible in global trade finance. Once, all major commodities, oil, gas, soybeans, were traded in dollars. Now, the yuan is the world's number 2 trade finance currency, especially in energy. China, the top oil importer, is pushing suppliers to accept yuan, and the Shanghai Energy Exchange offers yuan-priced oil contracts. Oil exporters accumulate yuan, embedding it deeper into the global system. The trend extends to gas, soybeans, copper, and more. For many nations, trading in yuan means less exposure to dollar volatility. For U.S. exporters, it's a threat. China's yuan deals are pushing them out of key markets. The dollar's dominance was built on commodity trade. As the yuan takes over, a pillar of U.S. power is eroding. The yuan's practical adoption is transforming global commerce. Central banks around the world are quietly shifting away from U.S. treasuries, a move that's sending ripples through global finance. This trend, once unthinkable, is now gaining momentum as countries rethink their strategies for safeguarding national wealth. For decades, U.S. government debt was considered the world's safest asset, allowing America to borrow at low interest rates and fund its ambitions with ease. Treasuries were the backbone of global reserves, trusted by central banks everywhere. But now, for the first time in modern history, central banks are holding more gold than U.S. treasuries, a dramatic and historic reversal that signals a profound shift in confidence. The weaponization of the dollar, such as freezing Russia's reserves after the Ukraine invasion, has shown that dollar assets can be used as a tool of foreign policy and aren't truly sovereign or immune from political risk. In response, countries are not only buying gold at record levels, but also repatriating their reserves, moving them out of foreign vaults and back home, seeking safety and control outside U.S. influence. This isn't just about China and Russia. Even traditional U.S. allies in Europe, Asia, and the Middle East are diversifying their reserves, hedging against future uncertainty and potential sanctions. The move signals deep anxiety about America's long-term reliability, its rising debt, and the future of the dollar as the world's reserve currency. With less demand for treasuries, the U.S. faces higher borrowing costs, which could ripple through the economy, impacting government spending, business investment, and even the rates consumers pay on loans and mortgages. Around the globe, nations are hedging against a future where the dollar is less stable and less dominant, preparing for a world where financial power is more distributed. The central bank's gold rush is more than just a trend. It's a clear vote of no confidence in U.S. financial stewardship and a warning sign for the global order. The trust that once underpinned the dollar-based system is breaking down, replaced by caution and a search for alternatives. As the world adapts, nations are preparing for a new financial era, one where the rules and the risks are being rewritten. The era of the dollar's uncontested supremacy is ending. The future is not yuan-dominated but multipolar, dollar, yuan, euro, and digital currencies competing for influence. This shift brings risks and opportunities, more complexity, but also more autonomy for nations. Countries can now pivot between currency blocks, gaining leverage and resilience. For the US, the loss of exorbitant privilege means higher borrowing costs and less global clout. The shift is driven not by a single rival, but by global loss of confidence in America's stability and policies. Rebuilding trust would require a dramatic change in US leadership and predictability. But with China's alternative rising, the world may not wait. The financial order America built is moving on, leaving the US to face a new reality.